Hi, and welcome to the Market Alert for Friday, the 14th of August 2020. So bonds and stocks battered after bombed auction. Silver soars. I don't know about battered. It was just a really quiet day. But the good news is seasonally, after the second week, going into the third and fourth week as the schools return, generally you see an increase in volatility as things sort of get back to normal. I mean, obviously it's not quite as normal as we would hope at the moment because of the virus situation, but things should start to pick up as people's vacation holidays end and they return to their trading desks. So yeah, let's hope and pray that things start to move a bit with a bit more momentum and volatility, because yesterday was probably one of the quietest days I've seen in a long time, which is odd really, given that Monday, Tuesday and Wednesday started to pick up a bit, but yesterday really quiet. And considering the positive news as well on the jobless claims, any other time you would have had 150, 200 point reaction from that. So very odd. So it can only be put down to the fact that the markets are quiet as people try to get a holiday in one way, shape, form or another at the moment, knowing full well that there is the potential for a second wave and being locked down again going into the autumn. So that's no doubt one of the reasons. So fingers crossed things pick up today. But yesterday we saw the market open. I'm just going to go through this very quickly because there's not a lot to report. We started off with a potential sell signal. What was galling is the fact that the market broke the 200 MA here in the pre-market session and traded down nicely, and then started to trade back. And then as soon as the cash market opened, prices started to trade sideways, and we've got the 200 MA in this BRN, which became a real resistance area for the market. So then we had a potential buy signal, got into the market. Prices then saw selling come back again, the 200 MA and the BRN slamming the market there. A lot of selling in this area. However, prices held at the 5-bar moving average, and the 20-bar managed to trade back up to the BRN there, but that 200-bar moving average, you can see there's a double whammy at this level. And then eventually prices move higher. I've also marked in the 13,054 here, which is the high of this bar here, where you can see all of this selling. I wanted to see if the market had got the impetus to actually move higher. So they did eventually. They moved up, and you can see then as soon as we got to the first target profit, the scalp area, the market then came back to the 200 MA. And down below the 5-bar moving average, and eventually you can see how powerful the BRN and the 200 MA were yesterday, and eventually prices broke through and headed to the target of the close, which in this area was looking to see if there's a possibility of closing the trade out, looking for potential weakness. Prices continue to move up to 24 points, but then are immediately sent back down again with some selling coming into the market there, and then it's a case of exiting the trade. The market then traded back down through the BRN, and here you see the green bar coming in. You've got the potential strength from the shorts there holding the market, but you can see how narrow the range is. I mean, when you see from here to here is 50 points, and the same down to the next BRN. You can see how quiet it is, and like I've said, there's no problem in walking away and waiting for the market to do something, or you can sit and trade through it. It's entirely down to the individual, but even so, it's still a great exercise in watching how the market unfolds even when it is really quiet. Again, we see prices coming back to the 200 MA, going back through the BRN there. It's just enough momentum to move the market higher. And at this point, I'm looking and thinking, well, the volume is non-existent as prices. Now, this is unusual because when you get through this sort of level, you generally get an increase in the buying that drives prices to the upside. But on this occasion we didn't, and here you can see that we've got a slight increase in this bar, but nothing to write home about. So prices come back, and once again they're slammed through the 200 MA, all of the MAs, as prices come back and stop the trade out. And then, interestingly enough, prices close off the lows and we get a spike in volume. So then we can expect to see prices find support, and that is precisely what they do. And again, prices go sideways. We then get a potential sell signal which isn't filled on this occasion. As prices move back to the upside, we get a buy signal that's not filled. And I don't mind signals that aren't filled. That's better than a failed signal. This time we do move to the downside. We've got all of this resistance in place. We've seen it so many times in the morning. So you think, great, this is going to add a bit of a good move to the downside. Maybe we'll get to the DP and that will be great, even just down to this level. And then prices, again, you see them buying back. So we do get the tip-offs. I mean, the software does show where they're buying back, where they're potentially selling, which is very, very useful. So prices stay down at this level here. This is just a break-even trade, and prices do drift down, but it just doesn't make any progress, and that's how it remains for the morning. So now we're over to the jobless claims at 1:30. The market moved higher. The jobless claims, by the way, came in well. As you can see here, there was instead of being 1 million claiming, it was just 963,000, and this is positive. And the Dow moved significantly on it, but the Dax really didn't move. It went up 25 points and then came back and sat on the DP level, the level I was hoping that the short of the morning would have traded down to, but failed to do so. So that's the dollar index. I was looking to see where the dollar was trading. You'll notice up here I've got the dollar now. The ETX now actually have a continuous contract of this. They only used to have the futures contract. So I'm watching this, and I'll cover that in just a moment as to why. So I was looking to see the dollar reaction to the the initial claims, and then back to the DAX just before the market opened. And you can see prices drifting down again, nice and steady after the news. Nice move to the downside there after the price bars turn red. We go through the DP. You can see they tried to bring it back with the selling there, and then prices moving sharply to the downside. So the market opens, and I think, great, we've got all of this. We've got a nice bit of volatility. It's increased. And then we ended up with the market trading sideways once more. You can see how they've just brought the market back there. Prices start to move high. We've now got the DP in the way. BRN there, the psychological level of 13,000. And prices just aren't interested. The market reverses, and then prices move lower. And immediately I can see here that they're buying back, because the range of this bar is narrower than the previous bar and the volume is greater. So prices once again come back, and then we have a potential buy signal which wasn't filled. Prices trade sideways and then eventually move back to the upside there. So again, jumped out of this trade at break even, or just over break even. It wasn't going anywhere to the downside, and then prices just traded sideways. There is such little momentum in the market that prices don't even fill the signals, which is a good thing, because I would rather have a no signal than a failed trade there. So that was yesterday afternoon. The market just moved up slightly. If we just bring this back here, it started to move up a bit, but nothing to write home about. The market trading up to the 200 MA, and then overnight you'll see prices as we start the session here. You can see this. The market's trading a 50-point range there, and currently sitting at the DP level and just at the 200 MA. So I'm going to have a look at the bigger picture, see where we are, see if there's any significant here that we can see. Certainly the DP and the 13,000 level is in place here, and also if we take out yesterday's close, then we've got the BRN to the downside here, and also the low. If we get any sort of a sell-off down to this level, I'll be looking for support in this area. Certainly it's going to take a lot to get through the DP and the 13,000. We need some momentum in the market, and if we do break this, then we've obviously got this area and the R1, so we've got the minor psychological level there as well. So in the daily chart, let's have a look at this. Yesterday you can see we had an inside bar, which means the high and the low are inside of the previous day's bar, so a bit of indecision. The market's trying to get back above the 12,977 level at the moment. It's just currently just trading above this, but we've got the two highs here to take out as well if prices are to move higher. So if we just go back to the 2-minute chart, you can see that we'll just bring that down. There's your high up there, which coincides with yesterday's high, and also the previous day's high as well, which is just slightly higher. So if we're getting it towards yesterday's high, we do have a move to the upside, then I know there's resistance from the day before as well, which is important. Yeah, as I mentioned earlier, I currently have the dollar index, and you can see since the spread betting firm ETX have added this in, it's useful to see this. Keep an eye on the devaluation of the currency, because if the dollar moves lower, precious metals move higher. Monthly chart wise for this market, you can see we've got a bit to go to get down to these levels, and also down to 2013. So I'm just going to have a quick look at these figures and keep them in the chart, just so that we can see where we are. The more the US dollar is devalued, and it will be, this is probably the last high you're going to see in the US dollar, the more that gold and silver will move to the upside as well. Speaking of which, just a quick look, you can see yesterday that the sell-off that we had earlier in the week in gold and silver has ended. Price is finding support at the 20-bar moving average, which we spoke about yesterday, but finding a bit of weakness overnight. Big move back yesterday though, and when you start to look at this, it's a healthy shakeout in what is a new bull market for the precious metals. Only one way, and that is to the upside, and particularly and especially given the falling apart of the global economy. As I say, you'll see that volatility starting to increase from Monday, as there is a resumption of traders back to the markets following their holidays. Whether they've gone anywhere or not, they're still entitled to time off, which of course they will take it. Okay, that will do it for this one. We have a bit of news though, while I'm just thinking about it. For today, we've got the core retail sales out from the US at 1:30. There's no news this morning, so the DAX could be quiet and sideways. Again, the choice is whether you sit and trade through the sideways or just wait until the volatility picks up from next week. Okay, that will do it for this one, and yeah, have a good weekend, and I will see you in Monday's edition of the Market Alert. And as ever, thanks for watching. See you in the next one.